The global economy, how is it performing and what is the outlook for the rest of the year? Hello, I'm Anand Naidu and this is The Heat. As we head into the second quarter of 2024, what's in store for the global economy in the coming months? So far, multiple economic indicators show that the recovery momentum in China's economy continues, and that's expected to also boost the global economy. Here in the United States, new economic numbers released on Friday show robust jobs growth over the last month, but there are fears about inflation. And India's economy is also getting lots of attention this month, with elections coming up shortly. We will get perspective from all three of these major global economies. We have a great panel of experts to discuss all of this. Joining us now from Beijing is Gong. He is professor at the University of International Business and Economics in Beijing. With us too from Oregon is Liang. She is chair professor in economics at Willamette University. Also joining the discussion from Los Angeles is Patel. He is a global business executive and senior fellow at the Claremont Graduate University. And with us too is Sourabh Gupta. He is senior Asia Pacific policy specialist at the Institute for China-America Studies. Welcome to all of you to the show. Gong, there was a recent commentary in the Chinese news agency Xinhua, and it said, and I'm quoting directly here, it said, the recent upturn in multiple economic indicators signifies a strengthening recovery momentum in China's economy, injecting new impetus into the global economy. What is your assessment of the Chinese economy and where it's going to be heading in 2024, the rest of 2024?
The National Statistics Bureau hasn't really announced the first quarter GDP figure yet, but I think the market sentiment has already changed a lot, actually. I think across the board, many analysts have updated China's forecast for the first quarter for above 5% growth for the first quarter. And I think it's a lot driven by the recently announced PMI number, the Purchasing Manager Index number, which shows a quite robust expansion of 50.8, and that's a quite significant development. I think, I've been saying this all along, that give some time that China's economy is going to come back. And I think we're starting to see very solid indications that the economy is indeed coming back in a very robust fashion. And also, I think consumer confidence, consumption are really coming back. So I think they're very good signs. And getting to the second quarter, I think it's only going to get stronger.
Liang, from what John is telling us, this there appears to be a lot of confidence in the economy, and I guess this augurs well for investment.
Yes, absolutely. When you look at the first 2 months of this year, the fixed asset investment has gone up by 4.3%. And on top of that, we talked about, how retail sales has gone up by 5.5%, industrial output has gone up by 7%, export has gone up by 7%. So all of these seem that, the supply side is transforming, is improving productivity, and then the demand side, there has been strong demand from the consumer side, but also from the business side in terms of the investments, even though the real estate sector still remains a drag. But I think overall the economy is looking well, as John just pointed out, even from the PMI data. The industrial manufacturing PMI, according to Beijing, has expanded the fastest pace in 13 months. So I think these are all very positive signs in terms of how the economy is going to go. And on top of that, I think, we have new policy measures that have been announced and also started to be implemented since the People's Congress in March. So I think, China is going to build the momentum and going to the second quarter with a strong position.
Right, Liang, talking about new policy measures, we're hearing a lot from China about what's called new quality productive forces. What steps are being taken in high quality development?
Right. So the new quality productive forces are really the instrument, right? The tool to achieve that high quality development. The high quality development means that we wanted to have more innovation, productivity driven growth. We also want to have more inclusive and sustainable growth. So how do we achieve that, right? So the so-called high quality productive forces, I think there are three dimensions to it. One is we're going to foster some of the emerging new technologies, new industries, for example, commercial airplanes, also green tech, green energies, robotics, AI, and so on and so forth. So these new technological sector are going to boost productivity. And then the second dimension is that some of these new technologies will be integrated into the traditional manufacturing and industrial sectors, and that will help to renew and also to improve, upgrade these traditional sectors. And last dimension, I think it has to do with upgrading of the standards, for example, energy efficiency standards and emission standards. And so all of these will be part of this new productive forces that would help to promote the kinds of high quality growth.
Ryan, here in the United States, there was some good news, some encouraging numbers for the Biden administration. The jobs report that was released this morning, Friday morning, showed that the economy added another 300,000 jobs in March. What is the outlook for the U.S. economy?
Well, that report was supposed to be a slower report. You know, when you think about what the future is going to go, you got to look at what the last 12 months was. And if you think about that, it's on average 230,000 jobs was added every month in the last 12 months. That's a lot. And, you know, when you think about what the outlook is going into the summer, I think obviously all eyes are still focused on the interest rates. But if you think about just the economy in general and from what the report, you know, it highlights hospitals, restaurants, local governments, and large warehouse retailers are showing the diverse growth of the highlights of that report, showing it was growing. And so I think that's a good news. You see wage growth actually slow down just a little bit to 4.1% of annual gain, but that still is going to be, you know, talking about the U.S. economy, that needs to slow down too for the Fed to decrease interest rates. So I think we're going to see that resiliency that we've heard the word a lot being described of the consumer confidence going forward. But I also think that it's still a little bit unknown on it, because I think the markets in general want to see what that decrease of interest rates will start. I think this report shows that the economy is really strong, but doesn't showcase when that feel is going to happen for the rest of the consumers.
Right, I want to get to that issue of interest rates and the inflation problem a little bit later in the show. But Sourabh Gupta, let's talk about India's economy right now. It is the 5th largest economy in the world right now and is likely to be the 3rd largest by 2030. In fact, there's one report from Forbes magazine which says that could happen even earlier in 2027. It's attracting more foreign investment. What's the outlook this year for India?
The outlook is a good one for India. It's expected to grow somewhere in the range of 6 to 7%, probably close to 7%. There's good investment happening out there. There's a lot of foreign investment coming in. And so the outlook is a good one. We need to look at this in terms of the larger cycle that we are in. You know, the cycle kind of started with COVID, and then we had the supply chain shocks. Then we also had huge stimulus money in many Western capitals. Interest rate mismanagement by the Fed, and the dollar then shot up, and this really had created real headwinds for many emerging economies, including for India. And in spite of very high interest, and of course I forget to add, but I mean, we had a war. We have an ongoing war in Ukraine, which has its impact on food prices, on oil prices. And in spite of oil prices being in the 80s, 85 right now, in spite of Federal Reserve interest rates being pretty high relatively, the economy is doing well. Emerging economies are doing well. India is doing particularly well. And that these what should have been headwinds are no longer the sort of headwinds as they used to be 10 years back when there was the taper tantrum. So I would say the outlook is good, not great. There's more reform to be done. There's an important election happening out there. But by and large, India will be a growth driver in the global economy.
John, the United States Treasury Secretary Janet Yellen, she's currently on a visit to China. This is her second visit, actually, in less than a year. What is China's perspective on this trip and what can be accomplished?
Yeah, I think her trip is a part of the regular dialogue channel that was determined back in November, I think, last year when President Xi and President Biden met in San Francisco. They have set up several channels of dialogue at minister levels between the two governments, and I think from what I heard, that's already pre-arranged. There's nothing special here. But I think what is indeed special is the topic they're going to discuss. And I think Secretary Yellen, I think, made a speech before coming to China regarding the things she would like to see, like to be discussed. And I think one of the things that she mentioned about the concern for excess capacity, China's exports, especially in several strong selling products like solar panels and electric cars and batteries and that kind of things. I don't think that message resonates very well in Beijing. I think, from Beijing's perspective, the excess capacity issue is not so much of a prominent one right now, and I think it won't be accepted that this is purely due to the industrial policy stuff. And I think, and I can really talk about the same capacity utilization in China. It has been pretty much hovering around between like 70%, 80%, which is fairly normal for industrial economy. As a matter of fact, if you look at the industrial capacity utilization data in the United States in the last 10 years or so, it's pretty much fluctuating, in that range as well, actually, from the census data that I've looked at. I think this is going to be a very good discussion point that both sides will express their strong positions. Nevertheless, I don't think the issue is going to be resolved at all. However, having said that, I don't think the electric car issue. It's surprising to me this is becoming an issue. Honestly, currently there's no electric car being sold in the United States from China at all, and I don't see a realistic plan that this is actually being done in the future. I mean, there are some ventures being announced so far from Chinese automakers in Mexico, but I think the target is really the Mexican market as well as the Central American market. Honestly, I just don't believe that any electric car being made in Mexico is going to cross the Rio Grande anytime soon.
Liang, what are your thoughts on Janet Yellen's visit to Beijing? As I said, this is the second visit she's making in less than a year. And what do you expect to come on these issues surrounding industrial policy?
Right. I think I agree very much with John. I think this overcapacity issue is simply a deflection, and I think is an over-exaggeration that is not conducive to the constructive dialogue between the two sides. I think China sees this as, industrial policies, and honestly, data doesn't really back up this overcapacity sort of claim. As John mentioned, China's capacity utilization is 76%, which is pretty much on par with, Germany, EU, US, and many of these countries, and also Brazil, and it's actually higher, a lot higher than India. And when you look at the sector that does have sort of overcapacity issues, that's in cement and glass, some of the construction materials, not in electrical equipment or general equipment or automobiles and so on and so forth. And I think the second point that I wanted to make, though, is I think this is really an interesting phenomenon when many of the auto exporters like South Korea, like Japan, like Germany, they export a lot of their car production. Over 50%, between 50% and 80% of the domestic production of cars are exported. China, the number is 20%. So I don't understand why, on the one hand, you think that when China exports a car, it's an overcapacity issue, but then when these other countries export cars, that becomes a competitiveness issue, right? These countries are simply competitive, and so they're able to export. So I think, and last point, I think is very interesting too, that, a lot of China's exports now are the green tech, green products, right? Like lithium batteries, like EVs, and like green turbines and solar panels. And I think there's a very large demand in the rest of the world to accelerate the energy transition, to mitigate climate change. And so I think there's a lot of demand. There's no limited demand, but there's definitely politically motivated restrictions on demand. But other than that, I think, if they are able to talk about things like climate change cooperations, financial stability, policy coordination, and also debt relief for many of the low-income countries, I think those would really foster healthy and collaborative spirits, and that would really help both countries.
Ryan, interesting point that Liang brings up there. Why is the export of autos from China a capacity issue? I mean, as she pointed out, 20% exports there compared to some other countries where it's much higher.
Yeah, I mean, at the end of the day, it becomes the bottom line on it, right? Is how can you, at the end of the day, economy for the U.S., economy for China, and specifically back to the consumer, how can you deliver the best price point to where they can have the best margins? And so I think a part of this conversation is also between the conflict. I mean, I wouldn't say conflict, but the conversation between the U.S. and China and how to create a better trade partnership, to me, is interesting, and it happens to be in the auto, and this could be very easily tied to any other tech, sector, specifically tech, or in other aspects, and even from data to between the two countries. So for me, I think it's interesting on capacity, even as the U.S. continues to try to catch up manufacturing in the U.S. I think that's another conversation to be added as well.
Right, I want to get back to something you were talking about earlier on, interest rates, inflation. Inflation is ticking up. It's still ticking up over the last few months. There have been interest rate increases. That's the effort by the Federal Reserve to ease inflation, but it's a nagging problem here. I mean, how much of an issue is it in an election year?
Well, I think we've seen inflation kind of start to slow a little bit, probably not like what the Fed wants to see so they can make those interest rate cuts. They're not in the position, or they've said, the Fed have said really clearly they're not yet there and they don't want to start earlier. To answer your question, how vital, how in an election year, it's very vital in how it plays out as well. I think the Fed needs to come out and dictate what they're going to do with the cuts. I don't think we're going to see nothing to their next meeting. By June, maybe they'll dictate before elections in November. They were saying potentially 3 potential cuts.
Yeah.
I'm not sure that's even going to occur. Maybe it's 2, but does that happen before November or does that happen afterwards? Because there is this history of lines of the Fed wanting to have to get out of the way and let the election play out. So it's a really kind of sticky subject right now on how the Fed's going to do it. And do they even make a decision based on the numbers today? If we were in June, I don't really see them making any cuts because the numbers are not backing what they want to do to make those cuts or start to decrease them.
Sourabh, one story that's coming out of India that's making headlines are farmers' protests. I mean, this is a big sector in India, the agriculture sector. What's this about?
This is a structural issue, and a structural issue which the Indian government has wanted to tackle for quite some time, and where the Modi government actually took some courageous moves, but it has been stymied in the process because farmers have extreme political power in India, particularly North Indian powers. I mean, there are a lot of agriculturalists in India. Most are small and marginal farmers, but there are very strong politically connected lobbies in North India, in the state of Punjab, who have been the recipients, the benefits of huge ag subsidies, and would like those subsidies to not just to be retained, but to be expanded. Their argument is that we get minimum support prices for paddy, for wheat, but because the water table is now shrinking because of overcultivation of these products, they now want minimum support prices for a vast range of other higher value agricultural products, other products. And the Indian government is saying we can't go on with this subsidy-based production across such a large range of products. They want, as I said, broader range of products, minimum support prices, guaranteed minimum support prices. They want guaranteed wage prices. And this is basically much beyond what India can afford or should afford, and how to create a more competitive agricultural market, particularly in a country which is not exactly bursting with a lot of land. I mean, the population density is very high. But these folks have had immense power for the last 40 years. They're not going to let that power shrink. They're not going to support reform. And this is what they've done. They've been able to gum up reform in this area over the last couple of years, and they're just showing their power in this regard. And frankly, because Mr. Modi has this dictatorial streak, and the BJP, his governing party, has such large majority, there are a lot of other folks who have supported the farmer protests just to cut him down to size. And I can understand that fact. But the larger story here is about agricultural subsidies, which India cannot afford, which India's government is trying to reform, and where there are entrenched interests not allowing that process to happen, and it's all coming together in an election year again.
John, one of the other big developments we've seen over the past year, in fact, we've been seeing it for a few years now, is the growth of artificial intelligence, AI as it's known for short. There's also increasing concern about regulation of this new technology. What is the impact that it's had on the Chinese economy?
Oh, absolutely. I think I foresee AI development as first application would be in industrialized manufacturing. I think the entire manufacturing sector here in China benefits immensely from this new development, and I think China will stand at the forefront of utilizing and adopting the latest technologies. It creates, of course, challenges, as you would imagine. I think it creates challenges for jobs, as well as these moral issues that people are very concerned about. And I think this is one area, both the United States and China, who jointly stand at the forefront of AI development. They should take the leadership to discuss these issues. And I think, thankfully, this is indeed one of the items that President Xi and President Biden discussed when they met in San Francisco, as well as actually being mentioned during a recent phone conversation they had just a few days ago. And I think indeed that the two government officials will spend time together to talk about this issue. And I think this issue shouldn't involve too much of differences between the two sides on ideology, on political systems. I mean, this is for the common goods of humankind, for mankind, and both sides should come together and develop some common consensus here that both communities in two countries can move forward.
Liang, looking at the annualized growth for China, I mean, there are hopes that this would be 5%, perhaps a little bit over 5%. But the other important thing when we look at growth in the Chinese economy is that China is a driver of global growth. And do you expect that it has been for the last few years? Do you expect that trend to sort of continue this year, what's left of this year?
Right, I think so. I think given the size of Chinese economy, which is close to 18% of the global GDP, and given China's above average in terms of global average growth rate, this year looking at 5%, China will continue to contribute about 30% of the global growth. And so I think according to the IMF, both China and India are going to account for close to half or even maybe more than half of the global growth. And I think also it's not just in terms of the quantity of the growth. I think, with China's growth, with large manufacturing capacity, especially in the green technology and products, this will really help to bring down some of the essential, climate solutions costs. And so I think that is very super helpful, not just to promote growth, but also really to provide that sustainability. And also I think it's important that, China is not aiming for high growth rate. So the 5% growth rate is going to be sufficient for China to realize this goal to double its GDP, by 2030 over 2020's level. So I think China is looking for a delicate balance of some short-term growth, but also with that long-term sustainability and transformation, structural transformation in mind. Now, that said, I also wanted to say that a lot of the emphasis now is on that productive forces, the new quality productive forces.
Yeah.
But I do think that some more support can be given to the demand side, even though the government has been talking about, the large equipment retrofitting and upgrading and trading compliances and consumer products. But I still think that more can be done, especially by providing, pensions, healthcare, and so on and so forth.
Right, Ryan, getting back to the role that the U.S. economy could be playing in the election, which is a presidential election, which is coming up in November. There was an interesting report that was released by the Brookings Institute just a couple of weeks ago, which said that voters are more concerned about inflation and less concerned about things like jobs and the overall economy. Does that tell us that the administration here has a bit of a messaging problem?
Yeah, I mean, absolutely, right? I mean, if you look at the data and the numbers and what we just talked about on all-time highs on one side, and then what we're still talking about inflation, which obviously is a big deal, but the consumer sentiment and the spending power is still there. And so, and it also means that different industries are feeling it in different ways and
Right.
different income levels as well, is also seeing this very differently. And at the end of the day, when it comes to talking about the economy, it should be talking about certain sectors, the evolution. I mean, even as you were talking to John about AI, how is the government with AI ethics and how businesses are leading it? So
Yeah.
these conversations are not happening
Yeah.
in the presidential elections. Unfortunately, they're just staying very top level, top line, and not really diving into
Yeah.
the data, which I'm hoping they will.
Sourabh, India will be holding elections later this month. In fact, the elections will be held over a period of 6 weeks. It's a vast country, and elections will take place in stages over the country. And as you pointed out, the economic growth rate is pretty impressive at 7%. But the other problem that India has, which many countries in the developing world have, and that is the wealth gap, inequality. How much of this will determine? Will it play a role in the election at all, do you think?
No, no, I don't think so. Frankly, Mr. Modi's record on anti-poverty is not terribly good. I mean, a lot of people, because of COVID, because of other these exigencies, have fallen back in poverty and actually have had to go back to the farm. But Mr. Modi runs a very sophisticated political machine. The economy has done well. The sense is that India is rising, which devolves well to him. He's won important cases in the Supreme Court on things like Kashmir, on that temple, etc., etc. So I mean, much accomplished on his related to his nationalist economic agenda, and for that I think he will get rewarded. One has to understand, though, India has a first past the post system where multiple candidates are there. So I mean, little marginal percentages can really change the
Yeah.
equation. And so we have to bear that in mind. I mean, a couple of years back, I think 1 or 2 elections back, there was a party, North Indian party, which had won 25 million votes and yet
Yeah.
did not get even one seat in parliament.
Right.
So I mean, configurations work in different ways, but no, I don't think that that the issue
Right.
of economic livelihood issue
Yeah.
in that sense, as you framed it, will really hurt his prospects.
Okay, and we have to leave it there. Thank you to all of you for being with us. That's it for this edition of The Heat. I'm Anand Naidu in Washington, D.C.